All right, welcome to today's show. Friday, March 28th, last trading day ahead of the grain stocks and prospective plannings report. What a week it's been. Markets all over the place. We got a lot of red on the screen today. Wheat is leading this market lower. Got a nice little show built for you. Not a whole lot of fresh headlines, but we got some good stuff for you today. So thanks for joining. As always, post a comment. Tell us you're here. Love the engagement. And we'll run through your markets and then we'll break down today's show. So, all right, let's roll through the markets. Rick, wherever you want to go, we'll go to LaSalle Street here. May corn's down 5 3/4 at 444 1/4. New crop Dees corn down 4 cents at 439 3/4. Broke below 440 here this morning. Looking over at May beans down 5 3/4 at 10.11. Nove new crop beans down 3 at 10.17 1/2. Oil is a little bit weaker. Soy meal is down 230 at 299.50 on the July contract. Broke that $300 level. Looking over at Chicago wheat and KC wheat, that's where a lot of the blood is, a lot of the red is. We got Chicago down 10.5 cents, 521 on the May contract, July at 536 3/4. May KC wheat down 17 1/4 at 549 on your May KC wheat contract. July new crop KC wheat 562 1/4 down 17.5 cents. So wheat is definitely a tough spot here. It's not what we want to see, but we're getting out of the wheat here. Let's wrap up the wheat here and move on to stuff here. Feeder cattle, though, we got a little green on the screen. Up 40 points in your April contract. March is off the books and moved on. April is your front month, and we're on April now. 287.95 on your April feeders. Looking out, August feeders 291 1/4. Live cattle a little bit weaker, down 1/4, 25 points. 209.30 on your April live cattle. June's down 15 points. Your back months are a little firmer, though, up a nickel to 20 points out there in the back months. Hogs, they had a quarterly hogs and pig report yesterday. And out of the gate here, April's down 10 cents. May's up 90 points, 89.75, and up 97 on June. So hogs bullish numbers, trying to grind higher here out of the gate. Energy markets, crude's down 31 points, 69.62. Diesel's down a penny. Nat gas is down 3 pennies, 388.70 on your nat gas. The stock market, the Dow's down 260, the S&P down 30, the Nasdaq down 130, the Russell down 18. Bitcoin's down 2,000, 84,860. Gold's up 26 points, 33,088. Silver is 30 cents firmer at 35.38. The US dollar a little weaker, down 212. 0.212, 103.780 on the US dollar index. So that's a rundown of your markets. And it took me a long time to get through that. Geez, did I add some stuff in there? I don't know. Oh, well, there's a lot to talk about, but we don't want to look at the grains. Wheat down 18 points. Golly. Just when you think you couldn't go and do anything dumber, we go and do something like that. Down 18 points on your wheat. Chicago wheat headline drops to 7-month low. That's one of the headlines. Rain relief in Russia. Glancing some of Ukraine, Black Sea, EU rain relief. Expectations for some moisture in the plains, the Midwest, the Delta. That's what they're attributing a lot of the sell-off to. Some of it's with the ceasefire optimism that we'll get a deal there and that's going to alleviate, result in more grain available. But I'd note that Ukraine exports are already near pre-war levels, and we'll see. You got to have a crop to be able to ship it out, and rain's coming there in Russia. They've been really, really dry there in the Black Sea, specifically Ukraine. It takes some moisture to raise a crop and get it out the door. We can't just trade headlines. We got to trade production too at some point. So we'll see. Sometimes you get a seasonal rally in March, April, May timeframe, some freeze scare. You get into that weather market with wheat country. But if we get these rains, is that going to dampen our chances of getting a rally out of the gate here? So I'm going to pull a chart up here later and look at it. Might as well pull it up now while we're talking about it. I'm going to look at, let's look at May wheat here. This is May Chicago wheat. Look at that. Low, ugly. I'm going to zoom in for you. Enhance. There we go. 7-month lows breaking just rolling over and sliding off down. So getting it pretty extended from those moving averages. Anytime you have a big market meltdown or sell off, you always got to look for bounces. But we need some stories that are entering RSI is kind of entering that oversold territory as well. So I don't know. Those are your points of optimism going forward. That's a quick look at your chart today on Chicago wheat. Looking over at KC wheat, not quite as ugly, but still pretty ugly chart. Rolling over as well. Nasty day. Testing the March lows that we've seen. Haven't taken out those March lows on your KC wheat contract. So quick snapshot of your wheat markets there. All right, did a premium yesterday. Brian Basting, great to have him on. We previewed next week's reports and tariff talk next week as well, and reviewed some simple tools that you can go out and use to defend your balance sheet. We also did target orders on Monday. So we got some actionable stuff out there for guys to be taken advantage of and buttoning up their marketing plans as we head into an important week ahead. It's been a nasty week in your grain markets this week, but you never know how nasty it's going to get going forward. At the end of the day, you got to defend your decisions and continue to adjust your marketing plan depending where you're at, what you've done, and what your expectations or what you need going forward. So always important that you stay on top of that. And I don't know, this is one of those weeks where you kind of want to bury your head in the sand on Friday with wheat down 19 cents and corn down 7 on the day, breaking new lows. But we got to be honest with ourselves and with the path forward and maybe adjust our expectations. And we talked about that in some of those episodes there this week with Premium. We continue to run that special this week, final day of it here for 30 days free. If you sign up this week, text us at 309-664-2346. Let us know you signed up. Head on over to ATIProMedia.com. Sign up for premium content, $30 a month, $1 a day. It's a good deal. You're getting a morning wire. You're getting actionable text alerts, and you're getting videos that break down these text and action alerts, marketing strategies. So sign up today. Send us a text. Let us know you signed up. You get a 30-day free trial. We won't send you a bill. And try it out. Invite you to try it out. If you don't like it, cancel it, get out of it, move on, find something different. No harm, no foul. So, yep. All right. Had a quarterly hog and pig report yesterday as well. Pretty bullish across all categories. The all hog and pigs on March 1st, they were expecting it to be 1.2% above a year ago. It actually came in 0.2% below a year ago. Kept for breeding was down 0.6%. Expectation, the average guess was up 0.2%. Kept for marketing was down 0.2%. Expectation was up 1.1%. So just across the board, pretty supportive and bullish in that quarterly hogs and pigs report. Supportive across all the meat complex, in my opinion, with that type of report, and indicative of the environment we're in ag, of just kind of tough sledding, hard to make money, and questions about the optimism going forward, what they want to invest in things going forward. But sows farrowing and farrowing intentions also missed on the low side and within that report too. So bullish quarterly hogs and pigs report, and the market is trying. Out of all the red on the screen today, the hog market is trying its best to give us something green, give us something to cheer about. But, also, on the positive side of things, we had our 20th consecutive day of week-to-week gains on the choice cutout. Choice beef cutout, it actually dropped yesterday, 258, but it's still at 335.72. It's $7.66 firmer than it was a week ago print. So still seeing that elevated cutout. Spot market, the wholesalers got to fill orders. They're kind of stuck there. They got to pay what they got to pay to get the product delivered. Wait for the flip. The feedback signal and the loop there on feedback can be a little bit delayed. So we're filling orders now. They'll buy what they need to buy. Will the consumer, will the retailer push back and adjust what they're buying going forward as these prices remain elevated? So be interesting to see where it goes the week ahead. The ribs definitely leading the way, but the chuck and the round have been doing their fair share of the lifting and support there to keep things in line. See what happens next week with the cutout. Big week here on it. And going forward. Big ranges yesterday across the cattle board. Feeders traded nearly a $6 range. They were down $3 to $4 and then actually closed green on the day. Volatile, dynamic markets. A lot of people looking for a top. Sentiment changes day to day. We talk about it here all the time. You got great values to go out go out there and protect and embrace a bull market. We had new contract high settlements in April and June fats. So not contract highs, but the close in April and June fat cattle were actually new contract high settlements out there. Guys, this cattle market, it reminds me of the 21-22 timeframe in your grain markets where you just it's so bullish and so resilient that you almost get exhausted with risk management, and it really can set a trap where when you just think it's going to keep going and going and going, you quit managing risk, and that's when you get caught and don't have enough protected today and don't have enough protected tomorrow. So looking back those years, as a grain farmer, I know there's lots of farmers out there that wish they would have done more in that time frame when it was good and been more aggressive going out further to protect future years. Just really, this cattle market, it's bullish until it's not. And at some point, there'll be a black swan or a game-changing event or something you thought it was going to last a little bit longer than it actually did. I think there's guys keeping heifers back here that reduces the available feeder cattle supply right now. And it takes a while for them to hit the market. You keep a heifer back, you breed her this year, she has a calf next year, and then that calf is actually marketable and hits the supply chain a year later. So it's 2 to 3 year delay on getting that animal to market on the cattle side of things, but it can build back much quicker than we think. And then when you just talking cattle some more, we talk about the use of sexed semen, and there's just been a significant increase in the use of sexed semen, the beef on dairy component. Some of these historical metrics that we've used to look at the steer heifer mix in the past, can they be skewed a little bit by some of the factors out there with other pieces of the puzzle that have changed over the last 10 years. Mexican feeder cattle imports are ramping up. There's a drought in Mexico, and they need to get some cattle up here and moved up here. So those doors are opening. They're kind of, those numbers have increased. We sent a text out yesterday with a graphic from Steiner Consulting that talked about that and illustrated that. A lot of those animals are actually spayed heifers. So when you look at the on-feed, the quarterly number we get of the steer heifer mix, is it going to be skewed a little bit going forward as we have more spayed heifers on the mix that are coming from Mexican imports? So things to keep an eye on here today. All right. I'm going to take a sip of coffee. Appreciate y'all joining me today. Good to have a good crowd this week. Leave a comment, question. What are you looking forward next week? Appreciate the engagement and enjoyment. Enjoy you guys being here. So, all right, today, my soapbox moment for today here. Today, we live in a world of abundant information. Is it misinformation? You never know what to tell. Is the information you consume, though, is it helping you? Is it helping you assess and manage your risks? What you feed your mind can help feed your bias. So if you have a bullish bias, be careful what you feed your mind and what feeds your bias. So is the information you're consuming, is it helping you, or is it just enabling you to fuel your bias there? So I just remind you as we go forward into next week and into an important part of your marketing season as a grain farmer, as a cattle guy, that there's no secret edge. It's impossible to predict the future, weather, politics, prices. Use tools that are going to help you make the most of your marketing opportunities, and use strategies and tools that prevent you from having a bad day when the market does something you don't think is possible. I'm going to get off my soapbox now, but we got a tweet of the week too. And then we got maybe a comment out there. We'll dig into that here in a little bit. So tweet of the week, drought monitor yesterday. Delayed release, website funkiness, some weird stuff going on there. Showed a drop from like 53% of the corn area in the U.S. in drought, dropping to 16%. Just a dynamic move. But when you look at, I'm not sure what's going on there still. And there's still some different numbers floating around there. But it looks like they may have come and corrected that to 44% instead of 16% that they originally printed. But on the website, there's still some spots where 16% is reported. And when you look at their drought classification, I don't think they need a D1 drought, and there's some colors on the map that are D0. So I don't know, kind of wonky stuff, weird stuff going on there. But nonetheless, you know what's going on in your backyard. And I think the West needs some precip, needs some help out there. Have some snow on the ground in spots, but you get into the Western Plains and the Dakotas, and yeah, we need some help there. It ain't over yet. 53% to 16% is a big drop. And when you think about stuff going forward with the wonkiness of the website here on the drought monitor, it's got to make you scratch your head a little bit on the report on Monday and the numbers that could come out of that. I don't know. A lot of hype on the report. Anticipation builds on what's going to be printed next Monday, grain stocks and the prospective plantings. The markets have had some major price action here this week. Wheat's down 21 cents now. Will there be a significant correction on Monday because of what? We're going to get some new numbers. The trade's going to trade them. Historically, these markets are going to, I mean, they have the ability to move the market. Will it be a dud or will it be dynamic? I don't know. I vote that next week's going to be dynamic price action between the report on Monday and the tariffs on Wednesday. Buckle up, button things up, and make sure that you don't have a bad day because of something that you weren't expecting. Whether it's the USDA printing a overly bearish number and sends this market even lower, or you did a ton of risk management and sold a bunch of grain going into the report because it was going to be bad, and we get some sort of surprise where the market corrects and rallies higher. So we want to be able to embrace that bull market going forward. But let's dive into some comments here, see what we got there. Thanks for joining me every day. Appreciate y'all out there. Russ Farms, always love having you here. Well said, Brady. I have no idea why I wasn't selling corn 3 years in advance when corn was over 7. But how do we take advantage of this situation in the cattle industry? Good point. Yeah, LRP is a great tool to have, foundational risk management, but you can only go out so far with your LRP. So then you got to go to the CME board, and there's a lot of tools out there. Put options. Selling the board and owning some calls against it. There's a number of strategies we can do to make sure you get a couple years covered up and go out as far as you can. If that's something you want to do, give us a holler and talk to us. We'll guide you through your choices, your options, and the decisions that you can make. But at the end of the day, you got to make the decision. It's up to you to decide. The market's going to present opportunities and it's going to take them away, and they don't always last forever. So you got to decide if you're up to it or not. With that, I'm going to get out of here. We'll be back Monday. We'll go live at 9. I'm going to try solo live at 10:55 for that release, and give you, the price action, the immediate reaction on the report, and then we'll have the A team, Nate Draco, Brian Basting, Michael Reginelli. They'll break down the stocks numbers, the regionality of it, what it means, cash-wise out there, digging into the regionality and basis implications, all that stuff, and just the details. The A team's going to cover it at 1:30, so big day on Monday. Y'all have a great weekend, and thanks for joining me this week. We'll see you Monday.